Hi, good afternoon. Welcome to the marketplace. Coming up, the Ghana reference rate key benchmark for determining actual cost of credit to go down significantly this week following Bank of Ghana's policy rate cut.
The policy rate have now dropped to about 350 basis points. We are expecting at least about 200 basis points deep in the Ghana reference rate, which is the benchmark rate.
Also coming up, government records 110% oversubscription of Treasury bills following reduction in key target. But interest rates were mixed on the yield curve. We'll tell you about that. Plus, prices of petroleum products expected to increase marginally at the pumps today. My name is Darryl Kwao. Details coming up. And thanks for staying with us, everyone. The Ghana reference rate, the key benchmark used by banks to set lending rates, is expected to see a significant drop this week. The Ghana Association of Banks projects that the rate will fall from nearly 18% to the 15% range starting Wednesday. The anticipated reduction is driven by improvements in major economic indicators, including inflation, Treasury bill performance, and the recent cut in the policy rate. Lawrence Saki is acting head of research at the Ghana Association of Banks. He explains.
Look at the data from January to this point. We've seen that there's that correlation when it comes to a decline or a decrease in the policy rate and then that of the lending rate. So for now, I think once the policy rate is out, the policy rate is currently out. So the key thing is the computation of the Ghana reference rate, which is the benchmark rate for the industry. And since the policy rate have now dropped to about 350 basis points, we are expecting at least about 200 basis points deep in the Ghana reference rate, which is the benchmark rate for the banking industry.
And that will take effect in the first week of December, right?
Yeah, the first week.
By possibly next Wednesday, right?
Yeah, precisely.
How many of the commercial banks, and let's be realistic here, are actively working with the Ghana reference, which is the 17.93? I stand to be corrected on that one. That is the benchmark. The 17.95 as we speak right now. How many commercial banks are working on this Ghana reference rate?
Well, the Ghana reference rate is the benchmark rate. It doesn't mean that banks are going to lend to businesses at that rate. So it's just a signaling rate for banks to use in computing the actual lending rates for businesses. So aside the Ghana reference rate, banks now have to factor in at least the risk profile of what the customer in determining the actual lending rate. So even though we are expecting maybe the GRR, which is the Ghana reference rate, to dip up to 15.7 or approximately 16%, doesn't mean that businesses will take credit at 16%.
Help me out.
All right, that was a conversation on PM Express Business Edition. Joining me, Senior Finance Lecturer at the University of Ghana Business School, Dr. Benjamin Amwa. He's on Zoom with me this afternoon to discuss this. First off, what are the key factors currently shaping interest rate movements, and how should businesses and consumers interpret these changes?
Thank you very much. The factors were clearly identified in the presser by the governor. So here we are looking at disinflation because we have gone through a period of declining in general price level. The stability of the exchange rate was also, identified. Then we talked about the global commodity prices. gold, and cocoa that are all influencing the fundamentals of the economy, which has been considered by the MPC committee to reduce the rate to the current 18 that we have. Now, for individuals, or you can call it the banks, there's a lot of things that they have to consider, right? And if I got your question right, you were saying that what should banks do or what should individuals do?
How should businesses and consumers interpret these changes?
Okay, so clearly what it means here is that, and from the predictions, we have been told that even the rate will decline further. So it means that going forward, we should still expect some rate decline. For you, the individual, you have to ask yourself, is it a time for you to borrow? Because if the expectation is that going forward, rate will decline, if you can defer the urge to borrow now, all things being equal, when the rate decline in future, you can borrow at that rate. The same applies to businesses because the prediction is that rate will continue to decline. The negative side for the banks and the economy is that when the prediction is that consistently rate will decline, then the behavior is that I will wait and see. So you will see the rates declining, but then the pickup in terms of credit would decline for some banks because some of the borrowers can afford to wait before they borrow. Those who have contracted loans already, they have locked in the rate, so they don't stand any chance to benefit unless they have the chance to top up their loans. Then they will contract the new loans at hopefully the new rate. It is only loans that will be contracted going forward that will benefit from the decline in the current rate until there is a change in the MPC rate, which may trigger a change in the Ghana reference rate, and then we are going to have a new rate on the market when it comes to borrowing. So now, if you're a borrower, ask yourself, do I immediately need the funds? If the answer is yes, you have to go for it. If you can defer the borrowing, then the strategy is you have to wait. The same thing applies to businesses. Unfortunately for banks, because they have contracted deposits, banks must find a way of selling the deposit in the form of loans or investing the pool of funds that they have. That is why banks may be aggressive now to offload or to give out loans now because the rates are declining and they would like to lock in the rate before it declines further.
Yeah, so we are reporting that we are expecting that by Wednesday, the banks would have, the reference rate would have gone down to 15% from 18%. How significant is that?
It's from 18, hopefully, is it 18 to 15, or did I wrong?
18 to 15%.
Thank you very much. It's significant, trust me, very, very significant because, look, for a borrower, even a 1% decline in rate means a lot. And so if the prediction is that it's going to move from 17.9 to about 15, that is purely significant. Of course, your risk premium will be added onto the MPC rate, the Ghana reference rate, but still we are going to see some movement in the rate. If we are successful, we may get rate in the teens in terms of what most borrowers or the average borrower may get. But that must be said that finally what you are going to pay in terms of the cost of the facility will depend on the exposure you present to the bank. Don't forget, we are also in a competitive environment. So banks may also try as much as possible to offer the best rate on the market so they can get borrowers to come to their side to contract for the loans.
Well, I find it pretty interesting in that interview that Ed, before we came right to you, when the acting head of research at the Ghana Association of Banks was asked if banks really do use the reference rate, and he says, well, they are not bent or they are not bound by that. It doesn't really mean that if it goes down 15%, banks are actually going to make their decisions based on the reduction in the reference rate. What do you make of that answer from him?
Okay, thank you very much. The Ghana reference rate is more or less the industry-wide rate. You can call it the starting point for pricing the credit facility. In a competitive environment, a bank cannot, and you cannot ignore the trend in the Ghana reference rate. This is an open market, and every single borrower would like to look at the Ghana reference rate to take an investment decision, either to invest or to borrow. So it will be difficult for one to conclude that banks will just overlook, especially this period of significant decline in the rate, and go with the mindset that we are going to charge our own rate on the market. Look, the market will force you to conform. So definitely banks will be forced to reduce their rate. They can't do anything about it. If not, competition will kick you out. In other words, you are going to have problem in selling loans. So definitely banks will respond to the reduction in the rates.
And so how should banks balance this push for lower lending rates whilst maintaining financial stability and manage credit risk?
Credit risks, banks will still have to do credit assessment. Banks will still have to be wary of who is requesting for a loan and be sure that the loans they dish out goes to those who deserve the loans and not just anybody who comes in to request for loan, because there's pressure on banks now to give out facilities. Credit assessment must be thoroughly be done to inform lending. Two, for stability, we have been having a challenge with non-performing loans. And non-performing loans greatly goes against bank capital, because at the end of the day, if the loans do not perform, it is the equity of the bank that will have to suffer. So clearly, if you are talking about stability, the banks in their quest to give out the loans will also have to be careful to make sure that these loans are good quality loans, high quality loans that will perform, so that they don't expose their equity capital to non-performing loans. We have a systemic problem of consistently recording high non-performing loans. The Bank of Ghana, together with Ghana Association of Banks, must sit down to look at what the actual cost is, so that in the quest to give out loans now that rates are declining, we do not worsen the already not too good non-performing loan rates that we have in the economy.
All right. And looking ahead, what should we be watching to understand where the economy and the lending environment is headed next?
Clearly, so for now, what we have to do is to look at what is influencing the decline in the monetary policy rate. Clearly, disinflation is one of them. General price levels are declining. So it is a variable you always have to keep your eye on. CD value against the dollar has also been identified as a factor. You cannot overlook that. You need to have your eye on it. We can also talk about the global environment we find ourselves in. Crude oil prices, commodity prices like gold and cocoa are, items that do influence Ghana's fundamentals. So we need to periodically or from time to time monitor the movement of these variables, because when these variables change in terms of the direction, it clearly impacts on the cost of funds from the point of view of the Monetary Policy Committee. So long as these variables are in our favor, then we are likely to have good rates. But like I said, consistently having rates decline over a long period is not also good for the economy, because at each point in time, you want to have a recalibration, something that can shock the economy to prep up consumption again. So we can enjoy the rate decline up to a point. When it stabilizes or it stagnates, the Monetary Policy Committee must find a way to kick the system or to inject the system again with some level of inflation so that the economy can rebound.
All right, Dr. Benjamin Amoah, Senior Finance Lecturer at the University of Ghana Business School. I appreciate your time with us here on the Marketplace. Well, fuel prices are expected to go up slightly today, according to a new outlook report from the Ghana Chamber of Oil Marketing Companies. Petrol prices are projected to rise by up to 3.3%, taking the pump price to about 12.91 Ghana cedis per litre. Diesel going up by as much as 5.15%, reaching around 13 cedis, 37 pesos a litre, whilst LPG may see a 3% increase to about 13 cedis, 80 pesos per kilogram. Now, the chamber says the increases are mainly due to higher international fuel prices and the recent depreciation of the cedi. Petrol, diesel, and LPG prices on the global market have all climbed in the past few weeks. The cedi also weakened by about 1.76% over the last 2 weeks. Analysts warn that diesel prices may rise further because of concerns about supply, and they add that the outlook for fuel prices will largely depend on how the cedi performs in the coming days. You're watching The Marketplace. Interesting developments on the Treasury market. We have an update after this break. Quick financial markets update. Government recorded 110% oversubscription of Treasury bills, the first time in 7 weeks. This was a result of Treasury's reduced target and not necessarily increased bids. Now, meanwhile, interest rates were mixed on the yield curve despite the 350 basis points drop in the Bank of Ghana's policy rate. Head of Trading at Melbourne Capital, Nelson Kujo-Kwagbaji, joins me on Zoom. Good afternoon to you. So this week saw a 110 oversubscription of Treasury bills. Talk to us about what this says about investor sentiments.
Well, thank you very much, Daryl, for having me, and good afternoon. Well, we cannot rely on just one single auction to actually draw the conclusion as to which side of the market the investors are tilting their attention to. You'll recall that for the past 7 auctions, government has recorded undersubscription. For instance, on the 3rd of November, government intended to raise about 5.3 billion Ghana cedis, but they've ended up raising about 4.6. That gave us an undersubscription of about 13.31%. Then again, on the 10th of November, government recorded undersubscription to the tune of 34%. On the 17th of November, undersubscription of 30%. Then on the 24th of November, undersubscription to the tune of 22.8%. And today we had about 110% oversubscription. And so it is clearly as a result of the lower target that government has set for the week. Government for the week intended to raise about 2.8 billion Ghana cedis, but the bids that were submitted was a little over 6 billion Ghana cedis, and government ended up accepting about 5.7 billion Ghana cedis. And so the oversubscription for this week is basically as a result of the lower target that government has set. And so in terms of investor sentiment, investors will surely go back to the Treasury bill market, considering the fact that the market is sort of a refinancing market for them. I mean, so those who want to lock up their fund in the shorter term, they will certainly go in for the 91-day Treasury bill, irrespective of the rate. Most especially the pension fund managers, they cannot have the money lying idle. They will certainly go. And so we cannot just rely on a single auction for today and just draw the conclusion that investor confidence is actually going up.
So we see interest rates move in different directions after a big cut in the policy rate. Why are T-bill rates not moving the same way?
Well, the normal yield curve is basically based on liquidity preference theory, which says that when I give you my money for a long period or a longer maturity, I expect the rates to be higher. the 91-day Treasury bill actually moderated from 11.14 to 11.0%. The 182-day from 12.68 to 12.4. So there was a sharp reduction in that regard. However, for the 364-day, it went up a bit from 13.06% to 13.09%. So these are some of the dynamics of the market. And we don't necessarily expect all of them to move in the same direction per se, but we hope that in the coming auction, we'll see how the trend will go.
So, and we're seeing more money going into the 91-day, 182-day, and 364-day bills. How could this affect investors and the general economy in the coming weeks?
Well, I mean, as I did indicate, the yield curve is a liquidity preference structure. And so if I need my money within the shortest possible time, I'll go in for the 91-day with the expectation that interest rates will go up and I'll reinvest at a higher interest rate. And so which means that government may eventually be meeting their target. Then another side of it is that if I am doing the 91-day Treasury bill, it means that I need my money back within the shortest possible time to spend. So you either reinvest, at a much higher rate, or you spend. And when you are spending, what it means is that you are going to provoke some level of economic activity.
All right. Good to see you, Nelson Kujo-Kwagwaji, Head of Finance at Mebank Capital. Thank you so much. I appreciate your time. And that's the marketplace. More news on our website, myjoyonline.com/business. More on one of our top stories today. Fuel price is set to go up today slightly. Also, investors flag CowBank as rice issue overshoots by nearly 30%. We have our eyes on the stock market as well because we expect CowBank shares to rise. That's it. myjoyonline.com/business. My name is Darryl Kwa. Thanks for watching. We will be back same time tomorrow.